For TraderInsight.com, I'm Adrian Manz, and let's take a look at one of the Around the Horn trading plan setups from Friday, June 13th, 2014. This is Cabela's Incorporated, ticker symbol CAB, and as we see on the trading plan, we have a short sale entry at $60.34. 50% to the target is $60.11. $59.98 represents 10 cents to the target price, and $59.88 is the target with our stop loss all the way up at $60.73. Every one of these numbers, of course, represents an area where we're going to do something, and what I'd like to do is just go over those rules and make sure everybody's on the same page one more time. I know that after a while there's a tendency to shoot from the hip on these things, and I just want to make sure that we are all very, very clear about what the rules that are associated with the trading plan mean. So our first hurdle is going to be this entry price, $60.34. Once we hit that entry, we are going to have a hard stop at $60.73. Then when we get to $60.11, 50% of the distance to the profit target, we're going to ratchet that stop down from $60.73 to $60.34. When we get 10 cents to the profit target, $59.98, we're going to move the stop again, and this time we're going to take it from risk-free at $60.34, and we're going to move it down to a profit-protecting stop at $60.11. At that point, the worst we would do is capture 50% of the profit that we were looking for on the trade. Then, when we get down to $59.88, it's all about how many shares we have, how big of a position. If it's a nice big share size, 1,000, 2,000, 5,000 shares, whatever, we can take off half and trail a profit-protecting stop on the balance. If we've got a small position on, we can just take the whole thing off at $59.88. So let's take a look at how this one played out. Here we see CAB opened for trading on Friday the 13th, right around that stop loss level at $60.73. Then it traded sort of infrequently right around the open, and when it got down to our $60.34 entry price, we saw volume pick up, and it oscillated right around that entry after triggering us in. Now at this point, of course, our risk on the trade is up to $60.73, and if it gets up there, we would pull the plug. But now we see the next thing that happened was a move down to $60.11. When the trade gets to $60.11, all I need to do in my trading software is pull that stop loss down and drop it right on top of that entry price. And that goes and changes the stop in the software, and now my stop is $60.34. The trade is risk-free. When price moves down even lower and gets down to $59.98, we're 10 cents to the target, and it's time to trail that stop in right on top of that 50% to target level. So now we're protecting 50% of what our profit objective on the trade was going to be. Price then moves down, gets down through the target price, and at this point, once again, ratchet down, and now we're going to have a stop right at that 10 cent to target level, and once we're down and through here, we'll trail a stop at a reversal of two closing prices. So in this case, we didn't wind up with a big trail because it did pop up and reverse this closing price and this closing price, right? We got up above it in this bar, but nevertheless, what this video shows you is the proper money management techniques that accompany my daily income trading service. And these apply, of course, to the around the horn portion, the stocks to watch, the radar, and the scalps as well. You always want to lock in profits once you have them, and you always, always, always want to honor your stops. I hope everyone had a great trading week, and I hope you enjoy your weekend. For TraderInsight.com, I'm Adrian Manz.